Hey, my name's Jonah. I'm one of the banking bros. If you're new here to this channel, we teach the financially foolish or fit how to crack the code to cash flow. This channel is dedicated to teaching the infinite banking concept, and today's video is all about the last year and a half. Okay, let me break it down for you. Around 2 weeks ago, I had a young lady who stopped by my office. She says to me, I've had my infinite banking policy for the last year and a half, and I've been banking. Meaning I've been taking policy loans and repaying those policy loans with extra. I've been pretty aggressive, but I just don't know if what I'm doing is working. I don't know how to read the online service or the statements that I get in the mail. Can you help me? So again, just in case you're new to this channel, let me be the first to tell you, this is my favorite question. I love to help someone understand how taking over the personal finance aspect of their life will benefit them now and in the years to come. Needless to say, I was excited and I jumped right in. Before we jump into the value created by this young lady, I want to preface the situation by saying this. The Cash Compound is a team of licensed insurance producers that teach the infinite banking concept. The infinite banking concept is just that. A concept. It's a process in which one can take over the financing aspect of your own personal purchases and therefore stop giving up control, giving up interest, giving up dollars to third parties, and instead keep control, keep interest, keep dollars with you inside your personal warehouse. One of the key components of a personal banking system is to practice the banking part. Okay, there's not one local or national bank that you could name that opens its doors in the morning and does not make a habit of loaning money to anyone that they deem worthy, or I guess as the bank puts it, that qualifies. Many times, what I see as the most common mistake of a first-timer getting started with a personal banking system is they get so hung up on the financial instrument being used that they forget that the banking actions is where all the money's made. This young lady trusted that the banking actions would benefit her, even though she wasn't quite sure how yet. So here's how the conversation went. She says to me, when I started my policy, I did a smaller premium. It's what I had at the time. And of course, I realized that I could practice banking and get more funds into the policy as time continued. So naturally, I asked, well, what in the world was the premium that you started with? She says, I started with $225 a month. Mind you, she's had her policy active and going for exactly 1 year and 7 months. 1 year, 7 months. So what that means, at $225 a month, she's deposited a total of $4,275 into her policy contract since she started. By any way looking at it, I bet that you and I would both conclude, same way that she did, that that's not an exorbitant amount of money by any means. However, it's what she had. She says to me, so in the last year and a half, each time I take out a policy loan, I've paid back that policy loan at around 10% interest. It was the interest rate that I made up, but I heard that you recommended I do something easy and consistent that I could keep up with, and that seemed easy to me. I love it. In the last year and a half, instead of only putting in $4,275 into her policy, like the insurance company was expecting, like is printed on the paper that she got, by taking loans and repaying loans, she actually had a total of $8,150 into her policy. That is almost double. Whoa. Now here's where it gets fun. She said, so what did that extra $4,000 contribution get me? I just don't know how to tell. So here's what we did. We looked at her original guaranteed cash values that the insurance company gave her before her policy even started. And then we asked for updated cash values so we could see the differences. And boy, were there differences. It's almost out of this world. This young lady is currently 23 years old, and she says her goal is to retire by 50. She specifically asked me, can we look at this policy when I'm 50 years old so I can see what kind of differences that I made in the last year and a half? Again, to be clear, she asked me based on what I did in the last year and a half as a 21, 22-year-old, taking cash value out, spending that money. repaying herself with extra, how does that impact her policy 25 plus years into the future? So first, we looked at her original illustration. When she's 50 years old, her policy guarantees her cash value at $60,915 with a death benefit, meaning if something happened to her at that same age 50, $280,890 that she could give out to her friends, family, church, or charity, whoever she wanted. Then we looked at her updated illustration, and at the same age 50 years old, her guaranteed cash value no longer read $60,915. Instead, it read $96,688. And her death benefit was $418,251. Folks, are you understanding what just happened? A $4,000 net injection in the first year of her policy built a $36,000 cash value growth. That means her cash on cash return in that year alone was 900%. Don't let that go over your head. In the 50th year by itself, her cash on cash return is 900%. Let's not forget that we're talking about guaranteed cash values here. I am not including dividends. Here at the Cash Compound, we only use companies that have paid dividends at least for the last 100 years. That means I can confidently say that we wholeheartedly expect for the cash on cash return, the guaranteed cash value for this young lady to actually be higher than what we just looked at. One of the most common mistakes that first timers run into is that they want to compare illustrations. They want to hold fast the numbers on the paper that their advisor showed them or that they saw from this company or that company. What a mistake. The banking process increases the value of the private bank. It increases the cash values. It increases the death benefit year by year by year. And if you're hung up on the illustration and the values that you get on day one that the companies can put on paper, I would remind yourself, or you can take my advice here now. The infinite banking concept is just that, a concept where you use specifically designed private whole life insurance as a bank. When I say use, I mean you're supposed to take the cash values out, use them, and then pay them back with extra. When you do, your cash values will be more. Everything in your policy will be more, meaning it will be higher than what the paper showed you on day one. This recently happened to me just this last week. I took a phone call from a young lady who gets on the phone and she says, I have 2 or 3 illustrations that I have gotten from different advisors or different insurance companies. I'm thinking about working with your group, but I want to see an illustration. When I heard that, my heart sank just a little. It means that she's hung up on the numbers and she's not intending on using that policy for banking. Or even if she is intending on using that policy for banking, she's thinking that the numbers on paper are more important than the actually banking process. What we teach is to be your own banker instead of using the third-party banks and take back control of your finances. Guaranteed.